Hey guys, what's up? Back at it with another video here. So today I'm going to be talking about the pair that I trade the most in the past 6 years. I've been trading this pair every single day, and most of you guys trade this pair also, and you guys are probably familiar with this pair, which is XAUUSD gold. So that is my favorite pair to trade personally, and if it was me who was speaking 2-3 years ago, I would tell you that this is the pair that I hate the most probably. But you know, it's that kind of relationship with gold. It's a love-hate relationship. But when you really learn how to trade this pair, then the moves that it gives you is like no other pair. Like, it moves so beautifully and so structured. So when you really know how to trade this pair, trust me, you're gonna make a lot of money on this pair. But a lot of people, they lose on gold because they don't understand key levels, they don't understand structure, price action. So in my opinion, other pairs like GBP USD or Euro USD, they're way easier to trade than gold because there's less manipulation in those pairs. But why do people trade gold more then? Because there's way more volume in gold. There's way more opportunities in gold. So you're probably watching this video because you're trying to find a certain strategy that is profitable on gold. And let me tell you one thing, it takes a lot of trial and error and time to master a good strategy on gold that's consistently profitable. So I've been trading gold for the past 6 years now, and in this video I'm going to show you guys what I learned from gold, and also how do I trade gold and how I consistently make profits on this pair. Let's get into it. Alright guys, so like I said, I'm going to be showing you guys a lot of what I've learned in the last 6 years trading gold. So there's a specific pattern that I use on gold that I've seen happen over and over again throughout the years. In a bullish trend and in a bearish trend, you know, this certain pattern, you guys probably have an idea about it, but I feel like, you know, it's so powerful and it's so overlooked because of how simple it is. So I'm going to be showing you guys what that pattern is and how I apply it to my trading to, you know, make the most out of gold or any other pair, because it works on a lot of pairs, but I feel like it works the best on gold because of the amount of volume that gold has and really how it moves based off the confirmation, you know, the structure, all of that stuff. So let's get started over here. So currently right now we're trading at about $2,936 per ounce on gold, and this is where price is right now. So I'm gonna back up all the way until here, until the beginning of the year basically, and I'm gonna show you guys what I see. So basically what I see on gold, I'm gonna skip to the next candle. When we broke this high over here, you know, we're trading above all 3 MAs on gold. So what that means for me on the daily time frame is that we're super bullish because we're trading above all 3 MAs. And even just to, you know, looking just like that, you can tell that we're starting to make new highs over here. Even on the H4, we're trading above all 3 MAs. And if you go on the H1, we're trading above all 3 MAs as well. So your 3 time frames are in confluence. So that's the best confluence that you can get because, you know, they're all telling you that you should be buying right now. So the pattern that I look at, the specific pattern, is this one right over here. So when you have a low, you go up, you make a high, and then you retrace over here. I wait for a certain support to form, and that's very important, support. So once I get that support formed over here and the next one breaks the high, very important, the next one has to break the high, the odds are that you're going to come up to at least tap until this zone right over here, if not higher. And you know, a lot of people are probably thinking that that's a very simple concept of looking at highs and lows, you know, higher highs, higher lows. But the thing that you have to wait for in that is for that support to form and for it to break the high, for the next candle or whatever candles are after to break the high. So I'm going to be showing you guys examples of that, and it goes the same way when you're taking sells. You know, you go down, you come up, you form a resistance, in this case not a support, and then you make your way down. And the thing is that it's not always going to give you the same length of a pullback. So you guys are probably wondering that if I know that it's making higher highs right now, it's bullish, why don't I just enter off a snipe? But the thing is that, you know, the first leg it might pull back until maybe here, and the next leg it might pull back all the way until over here. So if you're entering, you know, here, you know, you go in a deep drawdown, or if, you know, you might get stopped out as well, depending on how you place your stop loss, if you have a certain risk to reward or something like that. So I'm going to show you guys how I apply it. So as you can see over here, I'm going to go down to the H4. We had a low over here and we broke the high over here. So this was trading below the MAs, but you know, our trend kind of started over here. So we had a low, we had a high. Now we made a low over here, Now we've kind of taken out this high over here, so this is a pullback for me. So I'm going to be waiting for it to form support, but it shot up right away. So it pulled back slightly right over here, but I'm going to be waiting. I'm going to be checking on my daily over here. So the leg is way more clear over here. We have the low over here and we have our high over here. So now I'm going to be waiting for it to come down and form some kind of support over here. So just going to skip it. Okay, we've made a support right over here, and the next one broke the high as well, right? So what we can do is, if you're a swing trader, you can enter longs directly over here and place your stop loss, you know, somewhere over here, and you can target this high right over here, if not higher. So let's see how this goes. Okay, so you got take profit was hit over here. Why? Because you formed a support over here, and the next one broke the high. You know, it gapped up a little bit, but it broke the high. So that gives you the confirms that we're looking to make our way up over here. And you know what happened over here is that it broke the high right when the daily candle opened, and that's pre-Asia. You know, there's not much volume on gold at that time, so that probably explains why it came back during New York session over here to get liquidity over here, and then it made its way back up. But nonetheless, if your stop loss is here and you're a swing trader, you know, you would have profited off this trade 335 pips, if not more, if you're going higher, you know, depending on where you want to place your take profit. And you know, different people have different ways of finding zones to place your take profit. But if you take a look on the left over here, you know, you can see that your next zone is over here, next resistance, right? So you could have placed your take profit right over here, because once this high is taken out over here, you can see that there's clean range to the left, there's no traffic, so price is gonna make its way up for sure until there. But your take profit one could have been right over here. And as you can see, as soon as we took this high out over here, you see there was a bit of a retracement over here, because that's the buyers that are taking profits. You know, money's coming out of the market because they're taking some profits over here, if not everything. So there was a bit of a retracement over here, and then it made its way back up all the way until over here. So we're gonna keep going over here. We're gonna go back to the H4 over here, and we're gonna look for price to retrace once again. Okay, price, this actually, it did retrace over here, but this is not a deep of a pullback for me, because I'm gonna stick to the daily. You know, it's way more clear, and our low was over here. We had a low over here and our high is over here. So what is a good pullback for me? I usually take my Fibonacci tool and I take it from the low to the high, and I want price to come to at least the 38. And even the 38, you know, I feel it's a little bit aggressive. Ideally, I'd like for it to tap the 50, but the 38, I understand that in a bullish trend, you know, often it's going to go to the 38 and then make its way up, because, you know, it doesn't have time to come down all the way, you know, until the 61 or the 70, even the 50 at times. You know, most times it's going to hit, but most times it's just going to go to the 38 and make its way up. So the 23.6, I don't consider it. And I think on this pullback, as you can see over here, you know, it broke the high over here, but it didn't even go to the 38 yet. So I wait for at least these levels to hit, form a support, and then make its way up. So I'm going to take this off over here. Now I know that it's tapped the 50 at least. I'm going to wait for a support to form over here. So we have support formed over here. And once we break this high, we have confirms that basically we're going to make our way here. If not, then higher. You know, you can look to the left, and I believe there's no data. Okay, there is data. So you can look to see maybe over here. Either you can place your zone over here, or, you know, you can look at other ways to find a second take profit extension. So we can take buys above over here, and we can target either this zone over here, if not higher, and we can place our stop loss over here. And you guys are probably thinking that 140 pip stop loss is a lot. So if you're not swing trading, if you're scalping, or, you know, you're intraday trader, you can dig down to lower time frames and try to find, you know, a better stop loss for you, somewhere where you think that it's not gonna come back. You know, it doesn't make sense for gold to come back. So we're gonna play it over here, see what happens. So there was a bit of drawdown over here, and it ended up hitting take profit one. And as you can see right away, you know, the money's coming out of the market here because buyers are taking profit over here. So if you didn't take your take profit over here, you can extend it all the way until here, and then let's see if it hits. Okay, so we hit right over here, so that's 392 pips right over there. It's a very clean move. And if you didn't take profits over here, you know, after this candle closed right over here, this candle over here, you know, your stop loss should have been break even. So even if your TP was here, you guys are probably thinking that, you know, it's just a 1-to-1, it's not enough for me. But the thing with RR is that, you know, it's very subjective. So what you could have done is that once this closed up, or even the H1, you see when it shot up right over here, there's no reason for price to come down until here. So you could have placed your stop loss here, if not break even. So now suddenly your risk to reward is almost 1-to-3. And if you targeted this zone over here, your risk to reward is now a 1-to-6. So what before it was a 1-to-2 or 1-to-3 almost, now suddenly it's about a 1-to-6 if you were to place your stop loss over here. So no, it's more about how you manage your trade once you're in the trade, and how you manage your risk and how you manage your trade. So I'm just gonna skip through right over here. This one we already know it hit take profit. So beautiful trade over here. You have 2 wins now. I'm gonna keep going over here. So I'm waiting for a pullback right over here. Gonna go on my daily time frame. Like I said, it's way more clear. So I have it from here to here. Did we hit the 38? Not quite. So I'm gonna keep waiting over here. Gonna keep simming. Okay, now I believe we must have hit the 38. If I take it from here to here, yeah, we hit the 50 even. So just gonna skip it back over here. Gonna go down to my H4, and as you guys can see over here, you know, if you were to take this leg over here, if you're going a little more aggressive, you can see over here what it did is that it formed a support, and then it broke the high over here, and it came down and it stopped you out. So the thing is that if you got into this trade right over here and you place your stop loss below over here, and that's a pretty big stop loss, so I don't think you would place it there. But if you did, you know, you might have gotten stopped out. But depending on how you manage the trade, I remember taking this trade and I got out on break even. But depending on how you took this trade, you know, you might have gotten stopped out, and you know, that's part of the game. Because in this bullish trend, you know, we already caught 2 bullish moves that gave a really big RR and gave a lot of pips. So if you lose one trade, you know, it's not the end of the world. You cannot have a 100% win rate, but if you know how to manage your positions, you might not have lost on this trade. But what you can see here is a classic move that institutions do on gold. So if you were to go on your daily time frame, you know, you might not have taken the trade because I was waiting for the 38 to hit. But if you're going on your H4, what the institutions did right over here is that they took out this liquidity right over here. And, you know, for all the people who snipe the trades, you know, they take their low over here and their high over here. And in their head, they know that for sure price is going to go up because we're in a bullish trend. So they're entering, you know, over here, and they're entering over here, you know, they're stacking up their positions. And when they got the confirms over here, they're adding over here. All of them got wiped out. And that's one of the main reasons why I don't snipe on gold, because this pair is going to humble you really fast, and you cannot be overconfident and cocky on this pair. You really need to wait for those confirms, wait for that support to form in a bullish trend, or wait for that resistance to form in a bearish trend. And then, you know, once you have your confirms, if you're a swing trader and you're someone who has a job, you don't have time to, you know, take the trade on the lower time frame, you can just place your trade on the higher time frame and let it run. Or if you're someone who's an intraday trader or a scalper, you know, once you have your confirm on the higher time frame, you can dig down to your lower time frame and really look for a more precise entry, which would help you maximize your risk to reward and the pips that you catch. So right over here, another example of how, you know, liquidity was taken out at this low right over here, and all it did is that it's a deeper retracement on the daily. So as you can see on the daily, you know, it was just a better retracement to a 50, to a discounted zone. So over here we form support, and once we break this high over here, you have your confirms that we're looking to make our way up. So just gonna skip a bit over here. Okay, we broke the high over here, we have a confirms that we're trying to go up. So like I said, once again, if you're someone who's swing trading, you can take your longs over here, place your stop loss over here, and you can target this high, either this high right over here, because this is another leg, or you can look to go to this high over here. But this would be your take profit one, either here or here. But I would prefer at least until over here, right? Because on the daily, you're pretty much, you know, on the daily, that's your high. So just gonna skip it over here, see what happens. Okay, we've been making our way up now. We came back to retest over here, and you know, made our way up to take profit 2 or 1 right over here. 410 pips right over here, 419 pips to be precise. And you can see over here, you know, it went in profit, and it went in profit for about 200 pips, which is a lot, and it came back and retraced during New York session. So, you know, these things, they happen often. You know, price comes back to get that liquidity once again to make its move up. So you really got to be stoic in your trade, and, you know, don't get excited because you're up 200 pips. You know, until the trade is not closed, just set it and let it go, let it run by itself. So another trade right over here that you would have profited off. So we're going to keep going over here. I'll give another example right over here. Okay, so if you were to take this leg right over here, or even this leg right over here, you know, it came down, tapped the 50. Beautiful trade right over here. You know, it formed support and literally no drawdown right over here. As soon as it formed that support, you got your confirms. Take your buys, put your stop loss over here. If you're swing trading, you know, it's a pretty big stop loss. If not, then, you know, dig down to your lower time frames. You can probably get a stop loss somewhere around here and take profit 1 right over here. Take profit 2, you can see where you want to place it, you know, depending on the data on the left. This is an all-time high, so there's no data. Or if you guys have different alternatives to find a take profit 2, whether it's a Fibonacci level or, you know, psychological level, you could have gone higher here also. So you see, that's depending on how you place your stop loss. You know, if you were to put it here, even that's a 1 to 4 risk reward. And if you had it over here, you know, that's still a 1 to 2 risk reward, which is really good. And once this candle closed bullish over here and the next one broke this high over here, you know, I personally placed my stop loss break even over here. And, you know, now suddenly you have a 1 to whatever this is, 30,000. That's crazy. But, you know, it's really about how you manage your trade once you're in the trade, and that would allow you to maximize your gains, really, your risk to reward and the number of pips that you catch. So same concept here. Once again, you know, the same thing that I've been applying in my trading for years now. You know, you go up, come down, form that support, and then you make your way back up. So right over here, we did the same thing. We went up, came down, formed that support right over here, and we made our way back up. So it's always the same thing you're going to see in a bullish trend. In a bearish trend, it's the same thing. We're going to come down, go up, form a resistance instead of a support, and then we're going to make our way down. Take profit 1 and take profit 2. So it's fairly simple. You know, it's a very simple concept, and it's often very overlooked because people, you know, it's super simple, but people really overlook this stuff. And you really got to keep your trade the way you trade. You know, keep it simple, wait for that support or resistance to form, and then take your entries after, you know, with volume and just following the trend. You know, the odds are in your favor, and you should be able to make a lot of money off of this pattern right over here. If you guys have any questions, you can ask me down in the comments below. And we have our free Discord also, where we post 2 to 3 setups per week, so you guys can join that as well. Thanks for watching, guys.